Hello, hello. Hope you've all had a good week. We're back on a Saturday for another trade review. It's been a really nice week this week. Exactly the kind of week we want to see getting out of sort of summer and heading into the second half of the year. Um, Typically from sort of July through to August, the markets tend to slow down a bit and it can become a bit more sluggish. So it's nice to see that the first week of September uh, seems to be no delay. It seems to be picking up pretty much immediately. I've really enjoyed trading this week. I found it just very easy to read, which is always nice. So we're going to be reviewing a trade that I took on Thursday of this week. It was a forex trade on euro dollar. Uh, I'm blanking on the amount. I think it was about $8,000, something like that. Really nice trade, really easy, came really easily. So let's get into it. We're going to start on dollar. Briefly, just going to start on the weekly chart. Only reason for that is I just want to highlight this weekly balance price range so that we know what this is. So heading into this week, so I typically do weekly expectation on the Sunday of each week, where I have a little notebook and I write down from each asset what I'm expecting over the following week. And so I'd written in my little weekly expectation book that I was wanting to see us use this balance price range as essentially resistance. I wanted to see us set a high in here between Monday and Wednesday is when I wanted to see high of the week, and then I wanted to see bearishness follow that. So if we go down to the 60 minute, we can see that's exactly what played out on the Tuesday. We set the high of the week. I believe this is just shy of consequent encroachment. Yeah, close enough. And yeah, we've set the high on Tuesday. So I wanted to see bearishness follow that, and that's precisely what we got. So let's go down to the 15-minute chart. So we're looking between these two black lines. This is the Thursday. Let's have a look at what news we were having this day. So we had a decent amount of news. We had 1:15 and 1:30 p.m. high impact news, and then 3 p.m. high impact news dollar. So I typically don't trade until around 3 p.m. 3 p.m. till 4 p.m. is more often than not the hour that I'll take an entry. Can be a little bit before that, can be sort of 2:45 onwards, but typically 3 p.m. to 4 p.m. is when I'm looking to start and finish my executions. So in this case, that would be waiting for all this news to happen. If we only had 1:30 news, then I'll probably look to trade from around 2:45. But if we have 3 p.m. news, I'll wait for that news as well. So I'm typically looking for entries at around maybe 10 past 3 onwards. So this Thursday we have 1:15, 1:30 and 3 p.m. news. So off the 1:15 p.m. news, you can see we get a volume imbalance and we sort of crash lower. And yeah, we crash lower, but we get an immediate reversal higher out of that. Typically, you only sort of see that kind of reaction once we've taken liquidity. Typically, you will see it stab below the liquidity and then rush off higher. We didn't get that. And to be honest, at the time, I was a little bit puzzled. I was sort of looking at it, asking it why it's done that. It hasn't taken liquidity. It's unusual to see this kind of reaction without taking liquidity. But then I noticed that we have the 101 big figure level. And those levels, the big figure levels, do have quite a lot of liquidity at them. So that explains this sort of reaction. We'd swept the 101 level. There's a lot of resting orders around that level. And so yeah, that sort of explains this framework that we've got. But yeah, so as I always like to see, I've explained this in every one of my videos, when we take liquidity, which we can pretend that this is, when we take liquidity, so for example sell side here, I like to see that paired with the opposing liquidity. So we've taken sell side here, and then what do? We immediately come back up to the most recent swing high. So we've paired this sell side with buy side. So anyone that had sell stops here would most likely have placed their stop losses up here. They've been entered into their trade and immediately kicked out. Or anyone that's short in here, after seeing such an explosive move lower, probably going to feel pretty safe about putting their stop up here. So everyone that's been short has been kicked out. So from this point onwards, we are neutral. I'm not expecting higher or lower. I'm waiting for the market to tell me where it would like to go next. Because at this point, it's kicked everyone out. So it's now made the move exclusive. I don't know what the move is yet, but everyone's been kicked out of it. Including the people that had buy stops above here. They're entered here and then immediately they just see it run lower. Most of those are going to close their trade. So let's go down to the 5 minute. So yeah, we've swept this level and we've come up for buy side. We have now come off this level into the middle of this range. So at this point, I'm waiting for it to tell me. If we come lower, see some form of retracement higher and then break lower off that, particularly closing below discounter raise, then I would be bearish. For bullishness, I would like to see us come down in, and then I'd like to see it overlap the premium arrays. Basically, I'm waiting for it to show me which PD arrays it's going to disrespect. If it disrespects the premium the discount arrays, I'm bearish. If it disrespects the premium arrays, then I'm bullish. And of course it does this on the news candle, which is why I like to wait. When we have 3 p.m. news, I like to wait for that news to get out of the way, because usually that tells me everything I need to know. So we take sell side, we pair it with buy side, we're neutral, we drop down in. At this point, we haven't disrespected anything yet. We use consequent encroachment of this gap, this fair value gap. That's what we come down for, and then the news gives us a bullish reaction off that. So we come for the next level of buy side liquidity. So yeah, I mean, we came obviously quite a bit higher than that. Filled in a fair value gap, and then came a bit higher. But I typically only look at the liquidity that we've taken. So we've moved higher. Now my next question for the market is, are we going to sustain this run higher, or did it just want to come up for this liquidity? Because yeah, after a move like this, if it just wanted this liquidity, we're just going to drop immediately. But if this is actually the direction we're heading, it won't just want this liquidity, it will want to keep moving higher. So typically after I see this, I'm not going to want to buy above this liquidity, because after we've taken this, I want to see some form of retracement. Like this. Once we take sell side, we take buy side. Once we take buy side, I want to see it drop down for some lower time frame level of sell side, or just to offer some sort of relief. And then once we've offered that relief, if it wants to continue higher, it will show me that by giving a break of structure higher. And then that's when I'll look to take an entry. If it just wanted to take this and come lower, I would wait for it to overlap this fair value gap. And then I'd wait for a retracement higher, and I might enter on that retracement, or I might wait to get a break lower off the retracement and then enter. But in this case, it shows me quite clearly that we're going to be coming higher. So we get this big run higher, take buy side, we offer relief, and then this candle here closing above both of these, creating a 5 minute order block, that candle tells me that we are bullish. Where's my target? The next untouched objective, because it's cleared this objective, it's already done that, but it's shown me it's not done coming higher. So what do? We just find the next objective. Price only seeks two things, and that's liquidity and imbalances. And so we came up this high, it's filled this imbalance, there's no other imbalances in here. So the next objective we haven't touched is liquidity, and that's up here. So as soon as this candle closes, I'm looking for a retracement back down in, and I'll buy any PD array we come to. I usually buy the first available one, so as not to be greedy. And this is my target. My stop goes below this retracement, because this is the relief. We've shown we're coming higher, very likely that we're not coming below here. And so, yeah, my entry is anywhere below the close of this candle, basically. Which in this case is just into the 5-minute order block. I haven't actually checked this, but let's see if... so yeah, if I was trading dollar, I would probably buy this fair value gap, because it's the first available PD array. And do we get the volume balance? We might just get a bit of the volume. Where is it? Yeah, we might just get a bit of this. But yeah, my entry would be on this fair value gap. And that's all it came down for, and then run straight to target. So back to the 5-minute. So yeah, from 3:25 p.m. onwards, I have my direction. So bullish dollar means bearish euro dollar and pound dollar. The reason why I was looking for bearish, I'll go through that in a moment. Let me break euro down a bit first. So euro has, on this Thursday, has been trading higher. We've taken out buy side. We took out buy side once here, twice here, and a third time here. And people familiar with ICT's concepts will have heard him talk about the 3 drives higher pattern. So when we take liquidity, if you get 3 drives into that, that's typically when you can expect it to come lower, or opposite if it's bearish. If you get 3 drives lower, after that third drive, more often than not, that's when you'll see it come to kick people out. So we get the drive higher here, we get a minimal retracement, another drive higher here, a fairly decent retracement here, but there's a lot of sell side here, and it doesn't come for that. Then we get this third drive higher, so people have entered buy stops above here, people have entered buy stops here, people have entered buy stops here. There's a lot of buyers in here, you know, higher high, higher low, higher high, higher low, higher high, lots of quote unquote buying pressure, and that's when they rocket it down for all these lows, taking the sell side. So at this point, we are neutral, exactly like it was on dollar. So I'm waiting for the retracement, and seeing if we disrespect the premium arrays or if we disrespect the discount arrays. As you can see, the 3 p.m. news gives us this move lower, so we're expecting bearishness, but we've taken this sell side. So we need it to tell us if it's going to continue looking for bearish objectives or if it was just coming for this. So we get the retracement, and then exactly the same as dollar, this 3:20 to 3:25 p.m. 5-minute candle closes lower than this candle. This is the break lower we were looking for. We get the relief, and we are now told which direction they're going. So initially, I had my entry set on this 5-minute order block, because we didn't close below this candle as well to make this one big order block. We only closed below this one. So this is the 5-minute order block. So initially, I had my trade, my limit order set on the open of this candle and the stop loss just above it. And I don't remember where my profit was set. It was either here or below here. And then I moved down, so let's draw a line on this. So I moved down to the 1 minute time frame, and I saw that we had this inversion fair value gap. Let's take the middle line off that, don't need that. So I noted that we had that, and we also had this fair value gap. So at the moment, my entry is here. So I'm thinking, great, we got a fair value gap up here that we could also come up for. However, like I said when we were looking at dollar, once it's shown me its direction, I typically like to enter off the first available PD array that we return to, because sometimes that's all it comes for. You know, this 5 minute order block is the second available PD array. This fair value gap is the third available PD array. I'm typically trying to enter on the first. So I think I entered this trade with 1.5% risk, but I decided to take another entry here for 0.5% risk. So if we were to come up for here, I'd be entered with 2% risk, which is fine. I'm happy with that. But at least if this was all we came up for, I'd still be entered. I'd at least get some of it. So let me turn the executions on. So you can see I entered here. Got quite a good entry. So this was for, I mean, on TradingView it says 2.4 million. I think that's equivalent to 20 lots, I want to say, something like that. It might be 2 lots. I'm not too sure. But yes, so I entered initially inside this inversion fair value gap, waiting to see if we'd get up to here. Once we closed on this candle, creating a 1 minute bearish order block inside the inversion fair value gap, I moved my limit order from here down to here, down to this order block, because we've come up to a premium array and then we've created another premium array away from that. So if my bias is correct and we are bearish, I want to see new premium arrays created and respected. So I wouldn't want to now see it come above this to come up for here. So that's why I moved my entry lower, and we got entered on the main bulk of my entry, which was 7.8 million. So that I think that's 7.8 lots plus the 2.4. So we're about 10 lots in. This did delay a bit more than I would have wanted to see. So we have the propulsion candle here, and typically when you get propulsion candle, that's when you want to see expansion lower. So I liked that we moved lower, we had the immediate rebalance, we expanded lower below this low. Usually when that happens, I want to see it really expand below that low. Once you've taken some internal range liquidity, you don't really want to see a retracement off that, because that can mean that that's all that they were coming for, and now they're going to reverse. So when I saw this candle come all the way up here, I wasn't too happy about that. It is possible that they were just retesting the inversion fair value gap, but because we'd taken the sell side, this move upwards, it's a higher probability that this is a reversal rather than a retracement. So at this point when I was entered, I believe I had my stop loss above this fair value gap. Once we moved up here, I moved my stop loss to above this high, because if we came above this, I didn't think it was likely that we would just be coming up to here to move lower. So I thought if we disrespected this, we're probably just going to be turning around, and I'm probably on the wrong side of the market. So I moved my stop loss to above here. Turns out we were on side, and all this was a retest of the inversion fair value gap, and that was confirmed for me when we closed below this gap. So once we closed below it, I think this is when I moved my stop loss to break even, because once we're below this, you absolutely don't want to see it come above this. If we get above this, I'm happy to be stopped out for break even, because I believe that's probably going to run higher. But we didn't even get the chance to retest it. As soon as we closed below it, that's when we ran lower. I took a partial here. I think that was on this level of sell side liquidity. Yeah, and then the main bulk of my trade came off here. So average of my trade was probably around here, and then we took the bulk off there. So 10 pips in total. I believe it was around $8,000 profit. Little bit slow to start with, but then as soon as we got below this, off to the races. We're absolutely chilling. And so yeah, there we go. I said I would break this down when I posted it on my TikTok. So I hope you enjoyed. I hope you learned something. And have a great rest of your weekend. Thanks very much.